Greetings students. Today we are going to learn about one of USA's leading financial services company, Morgan Stanley. Let us know this company in a much better way. Morgan Stanley is an American multinational financial services corporation headquartered in the Morgan Stanley building, Midtown Manhattan, New York City. Morgan Stanley operates in 42 countries and has more than 1,300 offices and 60,000 employees. The company reports $304 billion in assets under management or supervision. The corporation, formed by J.P. Morgan and a corporation partners Henry S. Morgan, grandson of J.P. Morgan, Harold Stanley and others, came into existence on September 16, 1935 in response to the Glass-Steagall Act that required the splitting of commercial and investment banking businesses. In its first year, the company operated with a 24% market share, $1.1 billion in public offerings and private placement. The main areas of business for the firm today are global wealth management, institutional securities, and investment management. Morgan Stanley is an American multinational financial services corporation that, through its subsidiaries and affiliates, provides securities, products and services to customers including corporations, governments, financial institutions and individuals. The company operates in three business segments: institutional securities, global wealth management group and asset management.
Firstly, it was very steady. One of the things this management team has focused on is giving deliberate, predictable results for the marketplace. So we're very pleased with that. But the standouts on the business performance, institutional equities was a total blowout. They had a phenomenal quarter, $1.8 billion in revenues. Best quarter. It's been a business that's been doing great for a long time, but had an absolute blowout. Wealth management margins, fifth quarter in a row, 18.5%. And in fixed income, bringing down the risk-weighted assets, we're below where we were in the first quarter, which was below the year-end target at $239 billion. So there was a lot of good news. Not perfect. This is a continuous journey, but a lot of good news.
Let's talk about equities for 1 second. Blowout is a great word, and it must feel good, but it suggests that it's perhaps not sustainable, is it?
Oh, I think it's very broad-based. If you looked at the equities performance by region and by product, it was very strong. Prime brokerage was very strong. Cash equities was very strong. The derivatives business was strong. It was strong in Asia, strong in Japan, strong in Europe, and strong here. It was a good performance, no question about it.
Any weaknesses?
Oh, sure. There are always weaknesses, unhappily. I mean, our ROE isn't where we want it to be. We're on that journey, but it isn't where we want it to be and need it to be. That's number one.
Is that what's most disappointing?
That wasn't disappointing. That's clearly a function of where we are in this sort of turnaround of the institution. So it was well understood, but it's not where our aspiration is. Our non-comp expenses are up a couple of $100 million. We took some extra reserves relating to litigation, as we have to. There is litigation coming out of the financial crisis that all the banks are now dealing with. Fixed income recovered materially from the second quarter of last year, but isn't where, again, we want our fixed income business to be and will be.
We've covered a lot of ground very quickly there, so let's just take a step back and slow it down for 1 second. Talk about the brokerage business. I have said it before, and many people have said it. This is your singular achievement at Morgan Stanley, building this retail franchise out into something that is larger, more profitable than it has ever been before for this firm. It clearly has some traction. If the third quarter is as good as the second quarter was, can you get the pre-tax margin, which is sort of the hallmark of profitability in that business, up to 20%?
Well, I think I'm less focused on which quarter that happens in, but it will happen.
The problem is investors are focused on which quarter.
Oh, sure.
It happens in.
Investors are impatient. By their nature and design, they want results to exceed always. We laid out some targets a couple of years ago, and we were premature. And I think I said it to you, Erica. Firstly, it was very steady. One of the things this management team has focused on is giving deliberate, predictable results for the marketplace. So we're very pleased with that. But the standouts on the business performance, institutional equities was a total blowout. They had a phenomenal quarter, $1.8 billion in revenues. Best quarter. It's been a business that's been doing great.
Morgan Stanley can trace its roots in the history of J.P. Morgan and Corporation. Following the Glass Glass-Steagall Act, it was no longer possible for a corporation to have investment banking and commercial banking businesses under a single holding entity. JP Morgan and Corporation chose the commercial banking business over the investment banking business. Mitsubishi UFJ Financial Group, Japan's largest bank, invested $9 billion in Morgan Stanley on September 29, 2008. This represented the single largest physical check signed, delivered and cashed. Concern over the completion of the Mitsubishi deal during the October 2008 stock market volatility caused a dramatic fall in Morgan Stanley's stock price to levels last seen in 1994. It recovered once Mitsubishi UFJ's 21% stake in Morgan Stanley was completed in October 14, 2008. Morgan Stanley borrowed $107.3 billion from the Fed during the 2008 crisis, the most of any bank according to data compiled by Bloomberg News Service and published August 22, 2011. In 2009, Morgan Stanley purchased Smith Barney from Citigroup, and the new broker-dealer operates under the name Morgan Stanley Smith Barney, the largest wealth management business in the world. Morgan Stanley splits its businesses into three core business units. Institutional securities has been the most profitable business segment for Morgan Stanley in recent times. This business segment provides institutions with services such as capital raising and financial advisory services, including mergers and acquisition advisory, restructuring, real estate and project finance, and corporate lending. The segment also encompasses the equities and the fixed income division of the firm. Trading is anticipated to maintain its position as the engine room of the company. The Global Wealth Management Group provides a brokerage and investment advisory services. As of 2008 Q1, this segment has reported an annual increase of 12% in the pre-tax income. This segment provides financial and wealth planning services to its clients who are primarily high net worth individuals. Asset management provides global asset management products and services in equity, fixed income, alternative investment and private equity to institutional and retail clients through third-party retail distribution channels, intermediaries and Morgan Stanley's institutional distribution channel.
Morgan Stanley has 5 key divisions in the Glasgow office: operations, finance, IT, wealth management and more recently fund services. As an organisation, Morgan Stanley is always looking at its location strategy. We first came to Scotland primarily because of the people. There's such a strong talent pool, but also because of the availability of good quality office space at competitive rates. As an office in Glasgow has matured, we're moving up the complexity curve. So we're moving activities that traditionally would have been performed only in hub locations such as London or New York. We're now looking to migrate those to centres such as Glasgow. We started the operation with approximately 6 people. We're nearly at 800 now. We've grown largely because of the experience that we've had, the success we've had. The last 2 years have been difficult for the financial services sector. Morgan Stanley in Glasgow is benefiting from, we're still moving roles from high-cost locations such as London and New York to Glasgow, but we're also seeing an increased number of people that want to be based in an expanding centre such as Glasgow. Morgan Stanley places a huge importance, huge emphasis on work-life balance. It's one of the company's core values. Being in Glasgow, where people can live closer to the office than they can maybe in, say, London or New York, enables them to get out and enjoy their out-of-work activities more easily. We're now an established part of the financial community in Glasgow, and SDI and Scottish Enterprise continue to help with that by extending our network, keeping us in the business community and making sure we're integrated into the education communities as well. Morgan Stanley values what it can give back to the community.
Morgan Stanley was named one of the 100 best companies for working mothers in 2004 by Working Mothers magazine. Family Digest, a magazine, named Morgan Stanley one of the best companies for African Americans in the June 2004. Essence magazine named Morgan Stanley as one of the 30 great places to work in May 2004. Asian Enterprise magazine named Morgan Stanley as one of the top companies for Asian Americans in April 2004. Hispanic magazine selected Morgan Stanley as one of the 100 companies providing the most opportunities to Hispanics in February 2004. Morgan Stanley is listed in the Times Top 100 Graduate Employers, only recently dropping out of the top 40. The Times listed Morgan Stanley fifth in its 20 Best Big Companies to Work for 2006 list. Great Place to Work Institute Japan in 2007 ranked Morgan Stanley as the second best corporation to work in Japan based on the opinions of the employees and the corporate culture. The Financial Industry Regulatory Authority FINRA announced a $12.5 million settlement with Morgan Stanley on September 27, 2007. This resolved charges that the firm's former affiliate Morgan Stanley DW Incorporation MSDW failed on numerous occasions to provide emails to claimants in arbitration proceeding as well as to regulators. The company had claimed that the destruction of the firm's email server in the September 11, 2001 terrorist attacks on New York's World Trade Center resulted in the loss of all email before that date. In fact, the firm had millions of earlier emails that had been retrieved from backup copies stored in another location that was not destroyed in the attacks. Customers who had lost their arbitration cases against Morgan Stanley DW Incorporation because of their inability to obtain these emails to demonstrate Morgan Stanley's misconduct received a token amount of money as a result of the settlement. In July 2007, Morgan Stanley agreed to pay $4.4 million to settle a class action lawsuit. The firm was accused of incorrectly charging clients for storage of previous metals. In August 2007, Morgan Stanley was fined $1.5 million and paid $4.6 million in restitution to customers related to excessive markups in 2,800 transactions. An employee was charged $40,000 and suspended for 15 days. So students, we got to know about the various aspects of Morgan Stanley. Hope you must have got useful information about the company. Have a pleasant day ahead.